In Q2, we generated total revenue of $1.065 billion, representing 128% year-over-year growth, exceeding expectations across all geographies. The primary drivers leading to revenue outperformance versus guidance were strong continued demand for Bike, Bike Plus, and Tread Plus, lower than anticipated financing rates, strong apparel sales, and better than expected churn. During Q2 and into the remainder of the fiscal year, we are working closely with our global payment providers to improve our member experience. In the U.S., we have already begun to roll out delayed payment capture to a portion of our customers, which means we are adjusting our transaction process to collect payment closer to the time of delivery rather than at the time of sale. This change does not impact revenue results or our forecast, as we recognize revenue at the time of delivery. But over time, we will have a dramatically lower level of customer deposits, which are recognized on the balance sheet. We expect to finish our global rollout of delayed payment capture in Q4 of this fiscal year. Moving on to gross margin. Gross margin for the quarter was 39.9%. Connected fitness product gross margin was 35.3%, an expected year-over-year decline of 385 basis points. The leading driver of this decline was the September 9th price reduction of our original Bike and expedited shipping expenses incurred in Q2, as noted during last quarter's earnings call. Subscription gross margin was 60.3%, and subscription contribution margin was 65.3%, slightly ahead of expectations, with greater than expected leverage of fixed costs and some variable cost efficiencies as well.
As you may have seen, we've teamed up with the global megastar Beyonce to produce a series of themed classes, and we're proud to be joining her in supporting students of 10 historically Black colleges and universities with free 2-year Peloton digital memberships. Our most recent collaboration is with Shanda Rhimes, the hottest executive producer on the planet today. We worked with Shanda to produce the Year of Yes, an 8-week class collection spanning multiple fitness disciplines focused on overcoming fears, maximizing potential, and discovering the inner athlete in all of us. Our world-class content and music teams have a robust content pipeline over the next several quarters to further delight our member base.
In Q3, we expect revenue of approximately $1.1 billion, representing 110% year-over-year growth. As with recent quarters, we carried a substantial number of backlog deliveries into the quarter. In Q3, we forecast end-of-period connected fitness subscriptions of 1.98 million, representing 123% year-over-year growth. For Q3, we expect average net monthly connected fitness churn to stay under 0.75%. As John mentioned, port congestion issues continue to negatively impact our product delivery windows. As you may have seen, the executive director of the Port of Los Angeles recently reported that port unloading times are currently 4 times longer than they were a year ago. It's clear to us that additional significant investments are required in the near term to help us navigate these congestion issues and get products to our members more quickly and with certainty. The majority of our air shipping expenses will be in Q3 for Bike and Bike Plus so that we can dramatically improve product wait times and minimize reschedules for our newest members. The spend also incorporates elevated pricing for ocean freight from Asia, which is currently 3 times higher than normal rates and reflected in our forecast. We expect these expenses to have a material but short-term impact on our connected fitness gross profit margin in Q3, while the impact to Q4 will be more muted. We believe these outsized shipping costs will largely abate by June as we build up significant inventory stateside in the coming months.